What's up, everybody? Welcome back to Defi The System. I wanted to do a follow-up video from the one I posted last night since Bitcoin took a dump on us. Last night I was saying that we could kind of see a head and shoulders type pattern kind of developing and playing out right here, and I think this likely would have been a head and shoulders type pattern that would have resulted in us kind of starting to recover and build support. And I think that's what likely would have happened, but as you know, Bitcoin dumped on us. So instead, what we saw was when Bitcoin started to dump was right around here. So we dumped alongside it. So hopefully you guys were able to buy the dip. I did mention in that video that while this did look good and was showing strength and signs of a recovery, I did note that it was possible that we might wick below it. So we always got to keep in mind Bitcoin likes to rain on everybody's parade every once in a while, but it's not a big deal. We are just getting started for the last leg of this bull run, so we are still early enough where little corrections like this are good opportunities to accumulate. So I also want to go a little bit more in depth on the daily time frame on what I'm seeing on the RSI. So we talked about it a little bit in the last video. So these parabolic moves tend to move in three waves. So for instance, all the way from back here up to here, we saw on the daily time frame three waves. One, correction. Two, correction. Three. So what I want to see is for us to reach this blue level on the RSI and take a couple cracks at it. And each time we touch it, that would be a good opportunity to sell a portion. And since we know that it tends to move in three waves, with probably only two waves making it all the way up that high, it would be good to not sell all at once as soon as we get up here. But the main point of bringing this up is I want to talk about there are other areas on the RSI on the daily time frame that we also need to keep in mind, and one of them is the one we just ran into. So you can see this level right here of about 75 has the most touches, with a touch here, 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 there, here, 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 and here. So whenever we get a lot of touches like that on the RSI, it's the same as with, when you're just looking at a regular chart and looking at candles. These areas that have lots of touches are meaningful, and they can act as support and resistance on the RSI as well. So as you can see, that's why we're having a little bit of a tumble right here. And all the way back here, you can see it happened right here. We got rejected and came down, but if you remember my video from yesterday, I said it's important we stay above the 50 level. So we got rejected here, came down, stayed well above the 50 level. We only made it down to 54. So if you got panicked from this rejection and this crash, look how much you would have missed out on. This was all the way back here. I mean, if you would have panic sold from that little crash right here, you would have missed out on almost 3,000% in gains. So let's try to zoom in on that a little bit too. Let's see what that looked like up close. So right here, this crash we had was 40%. So this kind of like reminds me of like the "you are here" maps. This could give us kind of an idea of where we are in the grand scheme of this parabolic move that we're starting. Now, I don't think we should assume that we're going to have the same, 4,000% move, but I think that to put it into perspective, that we are likely in the first of three waves, and you can see those three waves. If you guys have ever studied Elliott wave theory, we have the three waves right here on this little pump right here. This was the first one. Let me get rid of this. So you can see the three waves. This would have been the first one. and it corresponds with this peak right here. This would have been the second one, so that peak right there. And then this one being the last wave, which was the biggest. Usually this one is the biggest, but every once in a while you see, where the last leg up is the biggest. So I just want you to keep into perspective, we're likely somewhere, kind of similar to down here, or, maybe even right here, but we should have tons of upside left, because we should see a three-wave move that really tries to take a crack at this like 90 level. So some other areas that we might run into some resistance with are the 80 level. You can see the touches we got here, 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 there, here, here, here. So lots of touches right here too. So when we get to this 80 level on the RSI, don't be surprised if we see a correction again. And then when we get to about 83, that's another level where we have a significant amount of touches. 1, 2, 3, 4, 5, 6, 7, 8. So we got some resistance. We will see small corrections, maybe even corrections as much as 40%, like this one all the way back here. So don't be spooked by these. This run is just getting started. It will happen fast, in my opinion, which is what I covered in the last video. However, we're not quite done yet. And of course, nothing is, you can't take anything for granted in crypto. I know Bitcoin could do something crazy and just flash crash, and things could look horrible out of nowhere. However, I just, even in the worst case scenario with Bitcoin, I would see Bitcoin recovering relatively quickly, and I would just see it being a fake out. That would just really shake out people who are selling for losses. With how bad inflation is, all I see on my local news, my national news, is the supply shortages, the working shortages, how bad inflation is. You don't want to jump into the US dollar just yet necessarily, just as the alt season and everything is starting. So don't be too spooked as we get rejected along the way. What I'm really looking for is once we break the 83 level on the daily RSI, I think that's when we're going to see the parabolic move that we all want to see. Every time we broke the 83 level in the previous parabolic move we saw earlier this year, we saw massive gains. So when we broke it right here, we had this nice spike, and then we came up a second time and didn't really do much, but that was because we needed more consolidation first. I think the most important zone to break through is right there, between about 80 and 83. So let's look at what we did before when we broke through that level. So that was the last leg up on the massive run we saw right here. And as you can see, we started to take a crack at it, and that's when things really were starting to pick up. We had a little bit of a rejection. You will see corrections throughout this parabolic move. This correction right here was about 30%. So, we saw lots of 30 to 40% corrections on the way up. So, we could see something similar where we get rejected at the 83, but then come back down and then come back up and break through that zone of, about 80 to 83. And that's what we did. We came back up, and that was the last parabolic move. So, that's what I want to see, is I want to see us break through this zone, and that's when we should see the last parabolic moves. We might break through it more than once. As I said, these things usually move in 3 waves. And so I think the mark of the beginning of this run is the breaking above the 70 level and reaching this 77 level. Back here, that's what indicated the beginning of this run up, all the way back here, when it was still 0.003 cents. As you can see, we broke through this 70 level, and made it all the way up here, and then had a correction. And so this was 1, 2, 3. So that would mean we're still in the first wave if we play out the same pattern, where we might see even, we might see even a little bit more downside. Hopefully not. I hope it gets picking back up soon, but it wouldn't be too crazy to see a little bit more downside before we ultimately break above 70 again and start knocking on these doors of 76. And then, we're going to run into a little bit of resistance here. So we might come down, find support at the 76, and then finally punch through it. And then whatever downside we see, it needs to go no further than the 50 level, like we talked about. And then we could see the last leg up, where we start knocking on these doors again and ultimately break through again for the last wave. I'm sorry that's so sloppy, I was kind of running out of space. But this is kind of what the pattern that I'm kind of envisioning or going to be looking out for. And it's not going to be exactly like this, but we see this often. I talk about head and shoulders a lot because that's basically what it is a high, a higher high, and then a lower high, or sometimes an equal high for a double top. But it's still a similar pattern. And then same for reversals to the upside. A low, a lower low, and then a higher low. So low, lower low, higher low. We see this pattern over and over again. High, higher high, lower high, or equal high. We see this pattern over and over again. So I'm expecting to see this be wave 1, and then a wave 2, and then a wave 3 that is just as powerful of a move or slightly less powerful. And so I just want to put your minds at ease. We are still looking like we're very early in this parabolic move. There's no reason to be panic selling right now. Instead, it would be good to be accumulating, because we're still not quite at the point where the herd is rushing in. We have new investors coming in. Our Twitter has grown from, I did a video a month ago, and this was at 220,000. So we've gained about 1,000 followers a day, which is excellent, and that would put us at over 300,000 followers to finish the year. And that is one of the most important metrics, I think, for getting Harmony One moving. Is I think the only thing holding us back at this point is needing more awareness and hype in the marketplace, and that will happen. It will come. It's just a matter of time. So the last thing I just want to talk about real quick is another indicator we can use for confluence that I forgot to mention yesterday when we're looking for the top is the MACD. As you can see with the MACD, we got the cross a little bit late because it is a lagging indicator, but this was still a good time to sell if you sold right when the MACD crossed on the daily time frame. So the trick though is to not sell too early, because it crossed back here too. I mean, if you're trading with small amounts like 5%, that's fine if you want to catch these moves, sell, and buy back lower. But just be very careful. Part of managing your risk also entails not spending all of your crypto all at once, hastily. You know what I mean? So the MACD, I think, is another indicator we should use for confluence as things progress, and I think that will be a helpful indicator that gives us more confluence. But, let me bring up the RSI again real quick. But like I said, we are on the shot clock. We have probably a maximum of, 7 weeks left for this run. Because like I said, this thing moves in, well, maybe 8 weeks. And so this move of, about 5,000% or whatever it is, it took place across 76 days. So just remember, we're on the shot clock. We still have some time, but, heading into the new year, if you're getting caught up in greed and not realizing that these moves are short-lived, you could be left to be in a bag holder or miss out on your chance to take your profits. Since I do think we are still early in this parabolic move, I think this is still wave one. A good way to find dip buying opportunities if you're curious. I know a lot of you guys are experienced traders and maybe don't need these types of tips, but for some of you guys who might be newer, one of the indicators that can help you identify your dip buying opportunities is the MACD, which has been pretty good at identifying areas of value right before we recover and break out. So put it on the 4-hour time frame, and if you bought every time that we had a cross up, you would be in profit. So right here, it goes from red to green. If you bought here, if you bought here, if you bought here, that's the thing with trading and investing. You got to be patient. You can't expect to be in green immediately. Some of these, like this one, if you bought right here, you would have seen some downside, but it would have been literally for just like 2 or 3 days before the strong recovery. And that's why it's also important to, if you're just dollar cost averaging or a trader, it's good to always have fiat available, because you never know when the dips are going to happen or how long they're going to last. So don't spend all your money in one spot, basically, if you can. So here we had the MACD cross up, so that was a good spot to buy. Here we had the MACD go red, cross up. So pretty much if you're buying every time the MACD is red and you see it kind of the volume peak down here, that's a good time to buy. The bigger the red candles get, that's a good time to buy, as well as when you see the cross back to green, that's a good time to buy. So if you're just, accumulating small amounts every time we're in red and every time we get a cross up on the 4-hour time frame, you're going to end up ahead. So right now with this dip might take a second to recover, but we're basically just in good dip buying opportunity. But yeah, just you can do the math yourself. If you look at the past 2 months of price action, and if you do a scenario where you bought $20 worth of Harmony 1 every single time there was an up cross on the MACD from red to green, if you did that every single time, you would be in profit. You would have a nice dollar cost average on the way up. So I think that's a helpful tool, especially for some of you who might be newer at investing or trading. I don't like trading personally. I think that it's mentally and emotionally exhausting and challenging, as well as you take a tax hit every time you sell. So I have evolved to be a long-term investor, and that's just what works for me. So yeah, just keep that in mind. When on the 4-hour time frame, our MACD tends to peak out around this level right here. So it's really looking like, this is going to be as deep as we go, 28 cents. I'd be really surprised if we even go back down to 28 cents again. So we're in good dip buying opportunity right now as we speak. And even once we get a cross up to the upside, even that, historically has been a good time to buy. Like this cross right here, that's still a good value right there. This cross right here from red to green, that was a good buy. This cross right here from red to green, that was good. This cross right here from red to green, that was good. So this is something that can help you identify these dip buying opportunities. And I think the harder part of it is just training yourself and your brain to not be afraid to buy dips. The thing to keep in mind is dip buying can work out poorly, but only if you're in a downtrend. So you probably have heard the trend is your friend. When you're in a downtrend or a range, so a range is just when there's just like chaos, market doesn't know what it's doing. It goes up, it goes down, it looks like it's going to break the high, but then it goes back down, and basically just like sideways movement where you're stuck between a high and a low, and we're not in a range. We're not ranging, and we're not in a downtrend. So now is not the time to be afraid to buy dips. Now is the best time to buy dips. And so hopefully that helps you. I'm going to make another video soon. There's a couple projects being built on Harmony One that I think you guys should check out. There's some good yield farming opportunities, as well as just opportunity to invest in a new project that could grow exponentially alongside Harmony One. So for Bitcoin, I'm not really going to be nervous at all unless we break through this level right here between the 618 and 786. We could go all the way down to 56,500 and still be bullish. We could even, maybe wick below this a little bit, but ultimately we want to see signs of strength and recovery, and what we don't want to see is signs of increasing selling volume, obviously, and a breakdown. And then what would be really bad is if we broke down and then flipped it into resistance and couldn't get back above it. That's what would be bad. And I really don't think that's going to happen. Anything could happen in crypto. So, we can't get too cocky. We should acknowledge that, anything's possible. The bears, I know some bears out there are calling for a double top or double dead cat bounce or whatever. It just doesn't make sense with the fundamentals, with how bad inflation is, with how adoption is increasing, as well as with just how the cycle is playing out. The cycle is pretty much repeating exactly what it did in 2013. And so I just don't buy it that this dump means anything. I think it's just a shakeout. Shakeouts happen, but I can see why some people are nervous. This looks like a telltale head and shoulders pattern. However, I see it being invalidated soon. We might have a little bit more downside, but I see this as being invalidated. And the target would be from this shoulder to this shoulder, which would have us end up being below the 56,500 mark that I said we need to stay above. And I just don't see that happening. So I think this will be invalidated. I think we're in the process of it starting to be invalidated. And, only time will tell. We got to wait and see. So hopefully that helps put your guys' minds at ease and give you a little bit more perspective. Like I said, now is not the time to be bearish. The trend is your friend, and we have a clear uptrend and bull run starting right now. So this is not the time to be fearful. We are not ranging, and we're not in a downtrend. Now is the time to be accumulating dips if you have fiat available, if you want to add to your positions. Now is the time to get ready and prepare for the top, not to be afraid and sell before the top. So that's pretty much all I got for you guys today. I'm sorry this video ran a little bit longer than I wanted to. I just had a lot I wanted to get into. Let's keep an eye on things, see how it progresses. I'll make a video for you guys soon, and I will catch you next time.